Could you share maybe some of your thoughts about cyber insurance right now, its relevance to customers, brokers, underwriters, etc.? What's going on out there?
Yeah, absolutely. I think there's a few really key interesting trends in cyber insurance right now. One of those is particularly at the risk selection end of the scale. We've gone through 5-10 years ago, you could get a cyber insurance quote just by your industry, your size, your revenue, and you'd get your number back regardless of how good or bad you were at managing your cyber exposure. That world is not here anymore.
Interesting.
We've gone through a phase where almost every major insurer is doing some form of cyber risk assessment at the point of underwriting. And now it's really, really more of a case of making sure that genuinely works and is really linked to what insurers know are the drivers of risk, and particularly what they strongly believe is their view of risk. And that sort of leads into the second sort of really interesting theme, which is looking more at the exposure management, reinsurance side. We're seeing a massive maturity coming to the market. Again, a few years ago, a lot of the reinsurance structures were incredibly simple, as you would have in a new industry. But now we're beginning to see more and more attention paid to specific catastrophes, specific risks, and insurers being able to take that view of risk and say, actually, we don't think that a cloud outage is nearly as likely as anyone else. So we're going to stake our book in the right direction, and we'll give additional cover for our insureds on that because we're able to identify what our exposures would be. And so that's the other interesting thing, is moving in the same direction as more mature insurance and reinsurance markets have been.
So is there a lot of difference between the product offerings out there between insurers at the moment? Some that will cover cloud outage and some that won't, for example? Or is there a norm at all in terms of your standard cyber essential products? Or?
Yeah, so I think there is a large variety, and that is standardizing, again, as you would see as markets mature, as you see that offering standardizing. But that gives more and more of an opportunity to play well in the market. If you understand your insureds, if you understand your risks better, you're able to give yourself a point of differentiation where your insureds are feeling pain, whether that's covering multiple claims throughout the year, whether it's giving higher or no sublimits on particular types of losses. All of those, you put the provisions in because you're worried about what might happen. But if you have the real understanding of what your book is, you're able to take that view of risk and give the product that covers it. Even recently, we've had more clarification from the Lloyd's market on war exclusions, about moving them from a bit of the sort of mosaic variety that we've got at the moment to standardizing the general cyber insurance product and then affirmatively giving an additional coverage for cyber war. And that only comes if you know your book. You can directly opt in to giving that product.